Let's talk about retained earnings. Many times the retained earnings account causes students a little bit of trouble. So let's go ahead and do a little review on it. Make sure that you've got a good understanding. So remember, retained earnings is a part of the equity accounts. Equity, we say, is made up of two parts. One is paid-in capital. Paid-in capital can be in the form of cash, paid in to obtain ownership. It could also be perhaps an asset that's contributed to the company, and in return, the company gets ownership. There are many different kinds of stock. Early in our accounting classes, we refer to this as common stock. If there is only one kind of stock, then it is common stock. It could also be called capital stock. It means the same thing. Second component is retained earnings. Retained earnings are those amounts that have been earned by the company in the form of profits and retained. So you might ask, well, how would that not be retained? They might be paid out in the form of dividends, which would be a subtraction from the retained earnings account. So two components of equity, paid-in capital and retained earnings. So let's talk about how you would calculate retained earnings. And we can do this by setting up kind of a base formula, if you will. Many times, especially in your accounting problems, you might be given some information such that retained earnings balance might not say balance, or it might, but they might give you some dates instead. So I'm just going to throw some dates out here. So let's just say as of 12/31/2020, the amount of retained earnings was $100,000. And then let's say you're given another set of numbers. In this case, it's going to be the balance in retained earnings at, we'll just say 20/31/22. So let's say that number, whoops, that won't work. Hold a second. Okay, so what I needed to do is make this 1 year later, not 2 years later. Okay, so if you're given these two amounts, a balance at 12/31/2020 or a balance at 12/31/2021, then you have to determine which of these was your beginning balance. B is for beginning balance. So retained earnings beginning balance. If you're given two sets of numbers like this, it's typically going to be the older of the two. So in this case, 100,000 was the beginning balance. So that was the balance at the end of 2020. On January the 1st, it became the beginning balance for this company. So following the same scenario, if you're given these numbers and you're asked to go backwards, if you will, to find balances, then what you're going to find out, let me finish the formula first. So A is for add. There are going to be some things we add. S for subtract. We'll see that there are some things that are subtracted. And then E is for the ending balance. So again, your problems in real life scenarios won't always tell you, oh, this is the beginning and this is the end. You have to figure it out based on the information that you're given. So if you're just given numbers like this that say retained earnings, 12/31/20 and then 12/31/21, you have to figure out which is the beginning, which is the ending. So in this case, the beginning is the oldest number and the new current ending balance is 125. Okay, let's go back to the formula now. So what do we want to add to retained earnings? This is where we're going to add in net income. So let's just assume that this company has earned some income this year. Let's say they earned $30,000. I also like to put a little total line in here just because it makes it a little easier to work with. So at that point, the beginning balance plus the net income, $130,000 for retained earnings. What are we going to subtract? We're going to subtract dividends. Any dividends that have been paid out. And in this case, to make my problem work, I'm going to say $5,000. Was paid out in dividends, so that leaves us a balance, in a new ending balance of $125,000. So again, look at your dates. You might see something like 12/31 and then the year 2020. So you know that's your beginning balance, and you can plug that in. Let's just play with some different numbers here. Let's say it was 130,000. And then what do we want to add? We want to add net income. If there was not a net income, if there was a net loss instead, then there would be nothing to add at this point. But let's assume this company did well, pretty well. And so they had a net income of 20,000. Again, I like to put a little total column, total line in here to make it a little easier to work with. And then what will we subtract? You might just see the word less on there. I'm just using the BASE to help you remember the order that it needs to go in. If there were dividends paid out, this is where those will be subtracted. If none were paid out, there won't be a subtraction. Let's just say 10,000. And we're denoting that subtraction with parentheses like we always do. And then rather than putting the word ending balance, you might do this, 12/31 of 2021. You make that calculation. Don't get crazy with dollar symbols, just $1 at the beginning, $1 at the end, double underline. By the time you're preparing your retained earnings statement, you know everything is in balance. So for proper form, make sure that you're double ruling there at the end. Okay, this concludes retained earnings. Now you got it.